Good afternoon. I would say good morning because it's about 3:30 in the morning. Well, actually, right now, I'm sorry, it's 6:16. I was up since 3:30 in the morning, but good morning. Good afternoon. Bubba here for our weekly chat on the old screencast. Hope everybody had a great weekend. Hope you enjoyed. I saw that we kicked some butt against Maine East, 56-0, so that's good. Anyways, in our continuing to help educate you guys on a better way of understanding what happens in the markets, I thought today we would cover a couple of interesting things that happened during the last week and how we can better recognize market change and sudden change. And right now I am showing a chart of the Dow. And what we see here is we look at the average daily range in movement, we can see that the days were very, very narrow, and they continue to get narrower or lighter or less daily price movement. And then all of a sudden, back in September, we started to see wider days, bigger days trading. What does that signify to the trader and investor? Is that tells us that there is more volatility coming. Okay, that tells us that there are more things that are potentially going to happen in this market. And so what does volatility mean? Volatility indicates uncertainty. And if we look at what we call the VIX index, which is the actual volatility index, we can see that back earlier, the volatility index was in a very narrow range. And as the markets widened out, so did volatility. And typically, volatility, or the VIX index, is known as the fear index. So we can see in the markets an increasing amount of fear, which really what that means to an options trader is that more people are buying put options or protective options for the downside of the market. But we see rising volatility, which if you're a trader or you're active, there is nothing better than rising volatility. That means there's more opportunity to make more money. So I wanted to run you through, first of all, let's take a look at the Dow Jones Industrial Average. And if we go back and we see that the market was obviously starting to go down, and then we had this cratering effect where there's a very technical term for what happened here, and this is known as puking. This is when the longs in the market puked out. And you can see by the way it came down, then it immediately ran back up. And in fact, on this Wednesday, the Dow was down almost 500 before rallying and only closing down 172. And then, of course, we see a run back up. Now, this is what we look at as what they would call a V-shaped recovery. Now, if we're looking at this chart, I would ask you, okay, where do you think the next move is going to be? Now, I'm going to give you the answer to this one, but I think the next big move is going to be lower. Why? Because we broke out of a very big consolidation range, as you can see from here. So now, in the business, old support becomes new resistance. Well, because of modern technology, and because of what's going on, I can actually show you what's happening live right now. Even though the markets aren't open yet, I can actually show you through the futures market live right now. And of course, you can see, look at where we went to. We went right to that same resistance level. This is the Dow futures. And we rallied up, and now we're selling off, and we're selling off pretty hard. So, but we see the same V-shaped recovery here. And now sometimes you get a W, and I would expect to see us come down to here. Now, the last thing I want to cover today, just briefly, is the stock of Netflix. We've all heard of Netflix. We've all seen what happens with Netflix. And last week, Netflix was in a very big consolidation pattern. Okay, and then all of a sudden, earnings came out, and Netflix lost 30% of their value overnight. Now, where Netflix goes in the big scheme of life over time, for fundamental reasons, the stock isn't very good anyways because it trades at too high of what we call a multiple. price to earnings. Right now, its price to earnings ratio is 95. In fact, before the sell-off, it was at 135. So fundamentally, it's not a very good play anyways. This is more of a stock and a play for the momentum traders and for people that want to be action. This is a risk-on trade. But what I want to point out here is that when we had this big sell-off, okay, this was an opportunity, and I can't tell you this was the exact bottom, but this was an opportunity to look to be a buyer. And if you'd have rotated down into a shorter term time frame, you might have found opportunity to buy in. How do we do that? Well, typically what I like to do is I like to look at like a 20-minute chart. And here we had the initial reaction off of earnings. And then all of a sudden, Netflix started to rally up a little bit. So in this stock, you look for these opportunities when markets go to extremes. You look to go the opposite of the extreme for a trade. Now, eventually, Netflix is going to pick a direction of what the new trend is going to be. But if we look at a longer term chart, we do see that there is a lot of support in Netflix along the bottom around the 320 level. Okay, so we're not surprised it's going to be a bounce. Now, we did have a terrific uptrend for a year. So we'll see now. Is it going to form a new trend, and will the trend be lower? That is something that will show up in the charts later. But these are things that we look at. These are keys in the market that give you a good idea of what the next move is going to be. Now, the last one I want to talk about today is Apple. Now, Apple has been in an unbelievably tight trading range. We can see that it's really been stuck between 97 and 102. Now, Apple has earnings today, and typically we don't put a naked position on going into earnings because we don't really know what the earnings are going to do or how they're going to affect the market or if there's going to be a surprise. But in today's world of technology, we have a pretty good idea that they know the news, and somebody can pretty pinpoint the accuracy. Now, I'm going to make a statement today that I think that Apple is going to make a move of 6 to 10% off of this number, and my guess is it's going to make the move lower. Okay? And why do I say that? A, because the overall markets are in trouble. B, because all the good news in Apple is out. So I can't imagine their earnings being so great that they're going to all of a sudden start to spike up because we knew the information. So let's see how Apple trades. The earnings come out after the bell, and we will see what it looks like tomorrow. Anyways, thank you so much for your attention. It's always a pleasure to be part of your day, and we'll see you next Monday. Have a great week, everybody. Thank you so much, and